digital lending is a core thing that has revolutionized credit in this country.
The biggest problem on establishing identity got solved by Aadhaar. India had grown massively as an economy between 2003 and 2015. So people wanted to consume more, people wanted to buy more.
Where are we in digital lending? Like in terms of process, in terms of tech, where are we even compared to global peers?
We are doing things that they can't even imagine doing right now, right? Lending has become friction free. That for us, fraud is the most important factor. If there are fraud signals, we will not play hanky panky with those signals. We will also sacrifice the customer, even if the credit engine says that he's a good customer. In a B2C growing space, letting go of customers was a hard choice.
Hi everyone, I am Ishan, and today we have Karan Mehta, CTO and founder of Kissht and Ring. Thanks, Karan, for joining us. Kissht, as we all know, is a leading digital lending platform helping consumers meet their financing needs. As I was discussing before we starting the shoot to Karan, that this is the first time we have an external guest with us. So a very special, episode for us, Karan, and thank you again for giving your time. So, Karan, the format that we do here is that we want to discuss more on the fundamental blocks of building some companies and some solutions, right? Payments is something which is core to Juspay, and we keep talking about it in house, but we wanted to talk more things about fintech because it's just not about payments, right? And digital lending is a core thing that has revolutionized credit in this country. And you've been one of the core guys who have actually built out stuff in this area. So we wanted some bites from you on how you have built this up, what led you to build this up, and more importantly, how you have built up. What are the for people who are looking to start out, or for people who are thinking about digital lending, what should they keep in mind from a tech perspective, from building out core product perspective?
Thank you so much for hosting me here, Ishan. I think it's a privilege to be here. Thank you for bringing me on your show as the first external guest. As we were talking earlier, right? For me, Juspay is a company that I truly do admire, because you guys are hardcore engineering buffs. You guys get the engineering part right, which very few organizations in India generally do. And that's why I've always had a lot of respect for Juspay. It's a company that I've always looked up for. And our partnerships with Juspay, both on the payment side as well as on the UPI tech stack, have been very fruitful for us. So for me, it's a privilege to be here. And thank you for hosting me. And you're absolutely right? Digital lending has come a very long way in India. We were the pioneers of the space back in 2015. Of course, with a cohort of other companies like Credit B and Early Salary and Zest and everyone. But that cohort of the 2015 digital lenders are what brought the wave of digital lending for customers to India. And all of us have gone through the entire journey from 2015 to now. We've solved problems along the way. We've changed the mindset. Thankfully, the government regulations have also supported us to bloom. And it's been a very educative experience over the last 9 years. Happy to share insights on that with you, with your viewers also. And it's something that I like to do. It's to also inspire the next crop of startups that will come up in the space of digital lending. Whatever insights I can share, I'll be happy to share them.
Thank you. So, we'll start with this, Karan. So, lending or credit is something that has been around, I think, since the mankind came in, right? So, in fact, I was a banker before I started my life in Juspay, and this used to be the thing, right? Banking as a business has been built on lending. So, there's a lot of lending that was going on. What changed? Was there a pivotal moment that you saw, no, this has to change? Because if you see from 1900s to say maybe even 2000s, there was not much change in the way credit was done. It was paper-led, and underwriting was a long process. Everything was, and it was taken for granted that this is the way it has to be. So what was for you worked and you said, okay, no, it has to change?
No, absolutely. Let me very quickly just to answer that question, and I have a rich memory of what happened in 2015, but let me rewind back to 2015, right? When we were starting up Kissht, before Kissht, how did personal loans work in India? You had to walk into a bank branch There were two types of loans. One is you can walk into a bank branch and ask for a personal loan, or you could walk into a gold lender and keep your gold and get the loan against it. If you walked into a bank branch, the first question they will ask you is, how much is your monthly salary? If you end up telling them that my monthly salary is below 25,000 a month, or you end up telling them that I'm a self-employed person, I get sporadic amounts of money throughout the month and I don't have a fixed monthly salary, the bank will say that we don't have a program to support you. Unfortunately, we can't do loans with you. The portion of people that were left out after applying this filter was about 6% of India's population. So the only way to get formal credit in the form of a non-collateralized loan, which is like a personal loan or something, was only accessible to 6% of Indians. And the country, the shape and size of India, of course, had a massive underserved, unserved population. This is the problem we wanted to solve. Of course, this is a problem that was existing even before 2015, but there were a bunch of things that literally came together in 2015. What had happened is India had grown massively as an economy between 2003 and 2015. So people wanted to consume more, people wanted to buy more. The mindset had changed. In 2003 or 2005, you would have asked my father that, can we take a loan to buy a house? He would have said that, no, debt is bad. I don't want any karza or any boj on my head. That mindset had changed because all of a sudden it had become the norm that if you want to grow your business, you take a loan and grow your business. If you want to buy a house, you take a loan. And the mindset had also changed that, okay, if you have a slightly luxurious spend you want to do, like buy a mobile phone, yes, you can get it on EMI and then pay off the EMIs. That's all of a sudden the taboo around debt was gone. The other things that had happened, of course, is with things like Uber and Ola coming in, Amazon and Flipkart kicking in early 2010s, the digital footprint had started building. And the people's affinity to using digital products had come in. You had people who were used to using smartphones. You had people who had data connections on their smartphones. So a lot of the things came together. The biggest problem on establishing identity got solved by Aadhaar. UPI had started, it started bursting out onto the scene. So you realize that you'll be able to take payment from customers. Something as simple as NASH, which was a paper-driven process, there was the API-based and the mandate-based NASH that NPC had already announced back in 2015. So we saw a model where the entire lending could be digital. At the same time, I'll be very honest with you, from 2015 to 2017, our lending was anything but digital. We used to call ourselves a digital lender, but there was a facade of digital lending. In the back of it, there were manual underwriters. There were field executives who'd run and get a paper-based NASH because the e-NASH didn't work. But we saw the promise. We knew that it's coming. And that's what we bet on. And that bet, thankfully, has paid off for us. But a combination of a lot of factors literally converged. And of course, not to be missed, there was a governmental intent. Government knew that credit has to be infused into the lower segments of the ecosystem. There was credit available for large businesses. There was credit now available for medium-sized businesses. They wanted to infuse credit into essentially a self-employed segment so that they will start spending and cyclicity, the GDP will grow. So the government intent was massive and it continues till date. Government is very, very aligned that credit needs to be pumped in at all the right sectors through formal credit channels. And it was just a combination of all of these factors that actually played out. It was, to be honest, very prescient to be able to see that, couple of years in advance, and we did have an early mover advantage. But things just aligned for us and we saw that this was the space to play in, and then we took a bet there.
Oh, that's great. I think all of us have been major beneficiaries of DPI, the public infrastructure, which
Absolutely.
Government pioneered in this country. This one thing that comes to mind, right? When it comes to payments, UPI is something that we compare with Western world. We say, okay, we are probably in RTP we have done the best job there.
Yes.
Could be right. Want to get a sense of where are we in digital lending, like globally benchmarked our industry, right? Digital lending, where are we in terms of process, in terms of tech? Where are we even compared to global peers?
Yeah. So if you take how UPI compares to, say, the card payment systems in the US, for example, or Europe for that matter, there's a big delta. We are far ahead. We are screamingly ahead. We are doing things that they can't even imagine doing right now, right? You'd be surprised that in digital lending, the comparison is very similar. In the US, yes, there are lenders who do digital lending, but this is for very specific use cases like your Klarnas and your Affirms of the world, where they are doing it essentially for checkout financing. But in India, you'd be surprised what's the length and breadth of the kind of lending that we are doing in the digital fashion, right? You have companies like Kissht and Credit Bee who are doing personal loans for the largest segments. Then you have companies like Fibe and Navi who do it for the employed, the salaried segment in a very, very robust manner. Higher ticket size loans, much easier access to credit. Then you have companies like your lending cards and the Axios of the world who also do merchant financing. All of a sudden you started seeing now this wave of more digital lenders, again like Kish and some of our peers who've gotten into the loan against property. The most extreme form of collateralized loans, we are also trying to digitize them, and the products are already there. Kish already has 10 branches, but the branches are a trust factor thing. We are doing lending in a very digital fashion, even for LAP. You have companies like Rupeek who do gold loans through an app platform. We've done lending in a digital shape and form for all kinds of collateralized as well as uncollateralized products, which does not exist. In the US, still you'll have to go into a bank to get a mortgage loan. You can't initiate that journey on an app and someone will come to you. Our customers have been spoiled because they expect that if I'm going to get a loan, someone is going to come to me and give a loan. Whereas that mindset in the US or any Western country is the exact opposite. If you want to take a loan, you have to go and approach a bank, be hopeful, be optimistic that you'll get approved. In India, the relationship is flipped on its head. You have one borrower and 5 lenders who want to come in and lend to that person. So they're spoiled for choice. The workflows, the access to the richness of data, things like account aggregator, things like UPI for even just the bank account verification. Your land records are now digitized in a very large part of the country. All of that is feeding into making lending butter smooth, and which is, I think, very few places in the world where I've seen it's even comparable. In the US, if you're an existing Chase customer or an existing BOFA customer, yes, you'll get access to credit very easily. But if you're like a farmer in Midwest and trying to get a loan from a lending institute that you're not a part of, you're going to have a very, very tough experience. In India, that is not the case. Lending has become friction-free. As long as you have your identity established with Aadhaar, you have the right sources of income, which are through a digital fashion, you will have no trouble getting access to a loan, which is less than what you can say about most even developed countries.
I think that's a very important point that you mentioned, right? So this industry thing called ETV, NTV, right?
Right.
I think we have seen even in India, traditional lenders have been able to serve ETB segments very
Yes.
well. But when it comes to NTB and building digital journeys, I think congratulations to you for
Thank you.
building these workflows, because it's a nightmare for someone who does not have a banking existing record to actually go and get a loan even now, right? And
Correct.
for ETB customers, you just get spammed by messages even if you don't need it, right? So that's been the
Correct.
challenge, but it's important. So I just wanted to start on when you wanted to build it, right? What was the mind? So is Kissht app only product, or you origination? So breaking down credit, just for there's origination, there is
Right.
underwriting, and there is collection. I think, and you can correct me, these are the 3 core pillars
Absolutely.
of lending, right? And you will have to build for all these 3.
Correct.
So let's talk about origination first,
Right.
right? So how do you originate loans right now? Is it the channel is website, branch, or is just exclusively app? How does it go about?
So, in the specific context of Kish, right? Let's talk about origination. We are purely an app-only origination platform. Of course, we've gone through many iterations over the year. We started with a website plus app model. We had an iOS app and an Android app. Over the last 4 or 5 years, our origination happens from a single property, which is our Android app. We've killed the website workflows. You killed the iOS app. Our origination happens on our Android app only, which has actually been very liberating for us, because then you build for a very specific workflow. When you're talking about origination, the biggest problem you want to solve is how do you acquire these customers, right? How do you get them to download your app? Many approaches work. There is your above the fold marketing. Larger companies have done newspaper ads, TV ads, all of that. You of course can do physical branches also if required, but physical branches for small ticket personal loans is not a very lucrative purpose. What we have focused on is a hybrid methodology where we have essentially done only performance marketing, digital marketing, which is targeted for people who are looking for a loan. And in 2022, we started with this very innovative model approach where we started acquiring your mom and pop shops, the merchants, and we started giving them essentially a Ring QR code. Ring is our sister brand. Their Kissht and Ring are two brands, same organization, just two different brands. We actually launched Ring as a brand for this specific purpose to experiment with a new customer acquisition model, where what we ended up doing is we acquired about 6 lakh merchants in India. We gave them a Ring QR code, which on the looks of it acts as a vanilla UPI QR code. You can pay the Ring QR code and pay the merchant through your Google Pay, Amazon Pay, Phone Pay, whichever UPI app. But also, if that same QR code is scanned from a Ring app, you can essentially pay to the merchant using your line of credit, the credit that we've already provisioned for you. What this ended up doing is, when a customer goes to a merchant shop and he sees this QR code, it says Ring, and there is also a message saying that you can pay using credit also. The customer ends up asking the merchant that, oh, how can I pay you with credit? The merchant kind of sells our product to that customer. And there's another incentive. The merchant A makes, say, X rupees per customer acquired for us. And also, more importantly, there are a lot of his customer base where he was extending the credit. You have a lot of this Udhari system.
Take it out of his book.
So he says that, oh, you know what, I have stopped doing credit. If you want credit, get the Ring app and you will get credit from that, and then use that to pay me. For him also, the hassle of managing credit books for his customers is completely gone. That model worked out very, very well for us. The CAC of performance marketing led customer acquisition was anywhere between 400 rupees to 800 rupees per customer, depending on the season of the year. Our CAC with the merchant-led model dropped to about 80 to 150 rupees, again, depending on the season. And that worked out very, very well for us. We are now at a model where about 40 to 50% of our customers are acquired through this merchant-led network, and another 50% are acquired through the performance marketing network. And our blended CAC goes down massively. And that's been sort of one of the innovations that we've done to bring the cost of customer acquisition down. That funnel, of course, feeds into our origination workflow. The origination workflow in general has now become more or less standardized in India. You have your Aadhaar, you have your DigiLocker linked to your Aadhaar, then you give your PAN number, we are able to do a bureau pull, you do account aggregator, get your bank account information, we do a penny drop or a reverse penny drop to establish your bank account details. Take all of that data, run it through a machine learning model, identify whether the customer is eligible or not, if eligible, what product to offer him, and give that. The LOS part has thankfully become so standardized in India that earlier, when we used to talk to banks and explain this to them, they said, oh, this is so alien to us. Now banks' journeys have exactly become identical.
Yeah.
So that's been the benefit of the last 8 years, where everyone has gotten used to this digital acquisition as well.
Yeah, I had downloaded both of your apps, Kissht and Ring, and I noticed one thing, that the workflows are very intuitive. The CTA was very clear. What actions do I need to do?
Right.
Very small things like type name as per your PAN, so
Right.
that
Yeah.
because in India we have typical
5
name
different names,
problems,
yes.
right?
Yeah.
So what kind of iteration, you must have gone through a lot of iteration to come to where you are, right? So can you walk us through some of these anecdotes, maybe what you were doing and how you have arrived at what you do today?
Absolutely. So the name part, right? It's very funny. We have had customers. That same customer has 4 different versions of the name in 4 different places. Just as an example, right? Rupa in the Aadhaar will be spelled as RUPA, and in the PAN card will be spelled as ROOPA. Because that customer always wrote her name in Hindi, so she didn't care how it was spelled in English. But then those names don't get matched, right? But we call this the workflow, the LOS, the origination workflow, which is all the steps that go in. Let me run you through what considerations you're running, right? The first consideration is you want to reduce your drop-off funnel. You will be surprised that most customers have their Aadhaar card in their wallet. They don't have a PAN card in their wallet. So if you ask for a PAN number before an Aadhaar number, there's a higher likelihood of drop-off, because the customer will think that, oh, you know what, I was filling out the Kissht application, PAN number nahi hai. I will go back home in the evening and then put my PAN number. You lost that customer, or you lost 50% of that customer base. So you want to identify what is the information that the customer will have handy, and you accordingly put it in. You, with that same mindset, you want to say that the customer should put in the least amount of data points inside. You'd rather want to fetch most of the things that could be fetched linked to their mobile number itself, so that they don't have a drop off reason. Your first focus area for your origination workflow is how do I minimize the drop offs. The more people I can take to the what we call the offer page, where we present that what is the loan terms we can offer to you, your largest focus is getting customers there. The more people who see your offer, the higher your disbursals would be. And you're talking about massive volume. Kissht on an average serves about 35,000 applications per day. So the cost adds up very quickly. You're talking about a top line number of in expenses of tens to 20s of crore rupees per month. So we want to maximize that. Just optimizing which block is placed where to minimize the drop off. If you know that you can reject this customer with a PAN, take the PAN the earliest, because PAN is only 50 paisa, you'll be able to reject him very quickly. But PAN logo ke paas kam hota hai, so you also want to place it later on. So it's like, you're trying to do a linear programming problem of identifying where you put your blocks so that the maximum people convert. But for the rejected customers, you end up spending the least amount of money, which is what we've optimized in Kissht. And that's, by the way, has become it. When we look at a lot of competitor apps, so I keep tracking, are they doing something differently? Are we doing something wrong? Are they doing something better? Over the last 4-5 years, you'll realize that everyone has tried different approaches. Now, almost everyone has converged on the same thing, because it feels like everyone is again looking at the same two dimensions. But that's what the thinking behind the origination journey goes. You want to reject the customer. If you are going to reject the customer, you want to reject them as early on in the journey as possible, because you don't want them cursing you, saying that, oh, if you are going to reject me, why did you take this truckload of information for me? So we have actually a workflow which at every step, after every screen of the journey, runs an underwriting engine. That, oh, do I have enough information to reject this customer? If I do, then very politely let the customer know that you should not proceed because you're not going to get a loan at the end of it. Then things like the ability to process the digital footprint of the customer on the device itself. So one of the things that we have pioneered at Kissht, and we are certain we've pioneered it because we've done reverse engineering of our competitor apps, is we take your SMS data and process it on the device itself, only sending back the AI signals to our credit engine. We do that on the device itself. That process, if I want to do it on the device, takes anywhere between 30 to 60 seconds. I need to start that early enough in the journey so that by the time the decision point comes, I should have that data processed and ready. A Sybil API on an average takes 6 seconds. So you also want to say that once I'm hitting Sybil, how do I keep the customer engaged? You are having a model where you're trying to keep the customer as engaged. He doesn't feel there's a lag. He doesn't feel there's a wait time. You can never have a model where you tell the customer that we've received your data, come back after 15 minutes to check the status. Absolutely deadly product design. It will kill you. It will kill your funnel instantly. So you want to keep the customer engaged in such a way that he feels like, oh, click, 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 and I'm at the offer screen, which is also what we need to optimize for. So in a nutshell, for acquisition, you want to optimize for your cost, you want to optimize for your drop-off funnel, and you want to optimize so that the customer always feels engaged and he doesn't get tempted to drop off and come back later. And that's essentially, over the years, we've put lots of learnings to get that in the right shape and form.
I'm sure a lot of investment would have
Oh,
gone
absolutely.
into this. It looks very intuitive now, but what it takes to build that intuition is something that it's not very palpable sometimes.
Yeah.
Interesting. You were talking about Sibyl and determining the eligibility. So that brings us to the underwriting part of it,
Right.
right? One of the things that always, as an outsider to the system, I am always worried about is this problem of false positives or false negatives, right?
Right.
And in your, essentially, it could be because you will be building those into your models of what
Right.
will be the interest rate,
Right.
delinquency rates, etc. So what work essentially goes? I'm not asking for the secret sauce,
Yeah.
but if you can give us some overview of how these systems are built, right?
Right.
What do you do with the data? You
Right.
have access to some data through various platforms,
Right.
but how do you massage that data? What do you do with that data? And with now, without sounding cliche, now AI has actually become, earlier there was a lot of topic
Right.
about machine learning AI, but now it has actually arrived.
Correct.
And we're seeing real use cases. And what are you doing? I'm sure you must be investing further to improve it with the new tech that has come in. Yeah.
Correct.
So if you can speak on that.
Absolutely. So let's talk about underwriting, right? I think very interesting problem, something we've solved. Let me first talk about the false positive, false negative part, right? From say 2015 to somewhere in the middle of 2018, we used to have a manual underwriting team. People who look at data, use their own intelligence and judgment calls. And when you call judgment, you also introduce biases. But with their own judgment calls, with their own biases, they used to approve or reject a pool of our customers. Somewhere in 2018, we decided that that model is not scalable. So we said that whatever we do, we are going to do absolutely 100% automated underwriting. We just don't want this role in the organization, which is called underwriter. So we kind of essentially just changed the company's outlook towards underwriting. A natural outcome of a programmatic or an algorithmic decision making is, yes, you'll run into problems of your 90% of the customers, your algorithm will say either a yes or no. Then there will be 5% of the customer where the system will say that I don't have enough data to decide, but I also don't have enough data to reject the customer. He could be that customer who's this thing, right? And you have another 5% of the customer where the system will say that by the data itself, the customer looks absolutely perfect to give a loan to, but something seems off and I can't figure out what it is. Just, either the data looks good, but you have a signal that this data looks fake or doctored. Your fraud signal comes in, and who do you give priority to? Do you give priority to your credit model, which says very good customer, or do you give a priority to a fraud engine which says that, oh, on a scale of 1 to 100, he's at 51. So he's neither 100% fraud nor zero this thing. How do you do that, right? So we took apart these problems. We said that first of all, to 90%, whichever is applicable, let it go through the algorithmic engine itself. We also took a very hard call, which at that time was a drastic call, that the 5% of customer where there's not enough data to decide yes or no, please blindly let's reject them. We will lose 5% of customers. In a B2C growing space, letting go of customers was a hard choice. The option we had, the option that we really debated and discussed for a very long time, there were literally passionate debates and discussions between the 4 co-founders. The question was, यार ये 5% को एक pool में डालते हैं and let's have a small bank of underwriters who look at that so we don't lose that 5%. And because the thought was, oh, how do you let go of 5% of customers, right? But we persisted. We said that, oh no, our DNA is now going to be digital lending. We are talking about scaling it 10x. So it's a 10-member underwriting team right now. At 10x, it'll be 100 members. They'll just scale linearly with our volumes. We are a digital company. We want to run the entire organization with a 300-member team, whether we do 1,000 crores a month or 10,000 crores. That was the DNA. So we said that this 5% of pool, we will sacrifice in lieu of being digital only. And guess what? It was the right call, because now in India, you're getting data for almost everyone. So that 5% pool has become very small. And the problem with a manual underwriting team is you'll always run into temptation कि अच्छा ये pool भी customer आ रहा तो इसको लेके underwriting में डाल दो manual underwriting. We avoided that temptation. For the last pool where credit and fraud give opposite signals, as a company, as a DNA, we took a call that wherever there is a fraud indicator, we will also sacrifice that customer. Fraud for us is a lot more paramount than credit. We realized that because we are doing small ticket size loans and essentially the EMI is smaller, a very large pool of India will qualify for the loans from a credit perspective. But we decided as a company DNA that for us, fraud is the most important factor. If there are fraud signals, we will not play hanky-panky with those signals. We will also sacrifice the customer, even if the credit engine says that he's a good customer. That's another call we took back in 2018. We've lived with both of those calls, and we've actually thrived because of those two calls in my understanding. And that has worked out very well for us. Now going to the larger question of, how exactly we do underwriting. So for underwriting, we get a very rich pool of data. You get your bureau data, which is your CIBIL, experience, Equifax. It's like your Janam Kundli. Now with the number of small micro lending transactions you do, your Ola postpaid account is also a wallet. Your Amazon Pay gets linked to another credit line. I get a very rich history of your data, and your CIBIL report gives me every phone number you ever reported to your bank, gives me every address you ever given to your bank, gives me when you open an HDFC credit card in 2015, you would have given an email ID and a phone number Or when you are probably staying in Delhi, I'll get your Delhi address, your phone number, your email ID, everything. So I get a very rich footprint from CIBIL itself. I get a very good source of cross validating, which is your digital footprint on your device itself, which we use to cross validate and also look at your spending and your saving behaviors. We try to see, are you a person who ends up prioritizing saving, or are you a person who ends up prioritizing spending? We support both customers, by the way. We just treat them with different risk bands and different pricing. We get the self-declared demographic data. So you will give a signal when you're using the app. You will tell us whether you're in Indira Nagar, in Koramangala, or in Bandra, or in Noida. So we get that information. We cross-relate that against the address we get from your Aadhaar and your DigiLocker and everything. And of course, one of the strongest signal we get is also when you do your account aggregator setup, we get a validation whether all of the data that we're getting, your name from CIBIL, your date of birth from your Aadhaar and everything, cross validates against the information you gave to your bank when you're opening your savings account. Because banks are essentially very diligent at KYC. So we get a proxy KYC from the bank. When you pull your account aggregator data, we not only get your transactions, we get your KYC data as per the bank. The large part with credit is the access to data in India is very rich. How to make sense of this data? And that's essentially where our secret sauce, which as much as I'd want to share, it's a modeling algorithm which I cannot share, but that's our secret sauce. What we've done is we've done close to about 11 million loans in India. So we have 11 million yes or no signal whether this customer ended up paying on time or not. We have essentially taken the richness of all of this data, trained our models. We have created about 600 features or model parameters over our history, and right now about 120 of them have weightage in our models. This model is essentially it's an gradient boosting algorithm, which is just a machine learning model, not the Gen AI, but the true blue AI of sorts. It gives us a very strong signal, and the signal is a very simple signal. What's the probability of default? What is the probability that this specific customer is going to default for a specific type of loan that we are offering him? We take the model output. It's a singular output. This is the credit model. The fraud model is a different yes or no signal. And we bucket our customers into 20 buckets. We call them basically bucket 1 to bucket 20. Depending on the risk profile that the company is willing to take in on this month, depending on how much capital we have lined up, how much commitments we have, what is the cost of funds of our borrowing, we decide that out of the 20 buckets, how many buckets you're going to open up in this month. The normal number is anywhere between 10 and 11 buckets. So about 50% of the population. These are all equal volume buckets. So every bucket has exactly 5% of the population split into it. We decide that, we are okay to serve buckets 1 to 11. There will be months where we've gotten costs at some funds at a much lower cost. So we'll say, we have the liberty to be slightly more risky. So we'll open up another couple of buckets. We'll realize that, the economic outlook for the next 6 months is looking weak. We will probably close out 3 buckets. So we've literally taken the complexity of digital underwriting and given the business teams a very simple panel where they can just dial up or dial down depending on the business outlook. And that is what has worked very well for Kissht. We are able to literally very dynamically adjust to how the market is evolving on a month-on-month basis.
Oh, that's very exciting. So you take even macroeconomic factors into account.
Yes.
Before these models actually take that into account. And also, thank you for educating us on the fraud bit. I had never actually thought on that side, because for outside layman, it's like, okay, credit decision liya or decide ke. But fraud is another angle that I thought was more relevant from the payment side, because people sometimes default and chargebacks do happen. But on this side, thank you for this. Moving to the third leg, right? Disbursement and collection. I've seen that Kissht and Ring both actually project and are instant loan apps, right? Where you get when you want. And I think because from the segment of customer that you are serving, and also from a consumption need point out, that is very important, because you don't want to wait, right? Now, okay, credit aayega 24 hours baad, and meri to abhi consumption need. And interestingly, I was reading somewhere on e-commerce, right? I like to share with our audience and you that I think it was in some Stripe blog or something, where they say that the real competition for a consumption-led app is not another consumption-led app, but Instagram and TikTok.
Right.
Because the customer wants to buy.
Yes.
And if your experience is something which is taking a lot of time, he will not, it's not that from X app he's going to go to Y app. He's just going to go back to scrolling, right? That's the challenge that we have.
Yes.
And that's the exact, I think, customer cohort that also that you in a way serve. So what have you done on that side that, this get your money into your account in 5 seconds, etc., and doing it in the correct way, right? That's also a big thing. So you explained about origination, underwriting model strength, but then when it comes to finally when the decision is taken by the underwriting engine that yes, it's a go-to person, you can extend credit and the customer accept those terms and conditions.
Right.
What goes on behind the scenes?
What you said is exactly our thought process all along. You want the customer to, there's a apply now button on the homepage. Your ideal workflow is that the customer goes from the apply now button all the way to that message coming from HDFC Bank that rupees 60,000 has been deposited in your account by Kissht. Customer should not leave the app between those two data points, right? And that's what we try to do. We just try to ensure that the customer stays on the app. What you said about Instagram and TikTok is very relevant, and I'll tell you why even more so. If you are on the Kissht app, you leave and you start scrolling Instagram, you will see very likely an ad from our competitor offering them that, oh, you will get up to 3 lakh rupees, because that's the signal that both Meta and Google get, that what is the app that is installed on this customer's phone, and very likely you will immediately get targeted by a competitor. We do the same thing, right? So we have our list
I
of
didn't think about this,
competitors.
from this angle.
If you are trying to apply for a loan from one of our competitors and you'll open up Instagram or any of the Googles or the Facebooks, very likely you'll see our app's ad promising you the exact loan that you're looking for, because we are the look-alike targeting of Facebook and Google is scarily accurate when we know who exactly we have to target, and we've put a lot of science into that as well, but a separate topic. Yeah, so our intention is never to lose the customer. The biggest friction point earlier was, of course, the disbursal, and both the establishment of which bank account and the disbursal to it. But thanks to all the innovation in real-time transaction processing, right, our least number of failures now come on the penny drop and the disbursal size because of IMPS and UPI-based disbursals. The most robust part of the experience actually is disbursal. When the customer puts in his bank details, in under 3 seconds, you are able to verify whether this bank account belongs to the same customer or not, and whether all the banking information that he's put in is simpler. Because of products like reverse penny drop, customer doesn't even need to enter his bank account detail anymore. He doesn't need to go and find out, oh, what my bank account and IFSC is. He just has to do a 1 rupee transfer to us, which establishes which bank account he prefers, whether or not he has an authenticated access, because he's putting in a 4-digit UPI pin. Not only do we establish that he owns that bank account, but we know he has controlling access to that bank account. And you also are able to verify whether this account is not under a debit freeze. So that's another signal for us from a fraud perspective. So we do this reverse penny drop to establish that this account belongs to the customer, and the transfer to that customer through NEFT or IMPS or UPI, it takes under 5 seconds. Before we can show that, we have this page where we show a splash of confetti and congratulations, your loan is disbursed. We are able to time it in such a way that at that exact same time, he'll see that message from his notification on Android that money has been deposited into his bank account. And that instant gratification works wonders for customer retention. Forget about losing this customer, but a customer who has one good experience with you on his first loan, next time when he's trying to think of taking a loan, he'll say, oh, Kissht was absolutely instantaneous. I don't want to go anywhere else. If someone else is advertising a faster loan or a better loan, I had a good experience. It's a known quantity for me, which is Kissht. I'll go back to the Kissht app. So that brings a very, very good psychological positivity also in the customer. And that is what we aspire for. Our entire disbursement and collection stack is focused to make sure that the customer experience is absolutely top notch. And of course, all thanks to partners like Juspay, we've been able to do it because it's a very complex problem to solve. But yes, we've been able to get that part absolutely right.
Thank you. Little bit segue. We want you to talk more about Ring.
Right.
Kissht has been around for, I think, 2015 you started, right?
Right.
It's still very prevalent and going on strong.
Right.
What was the idea behind Ring? Why did you start it? And I know that there is some UPI element to it as well, right? So how do you think UPI and credit, because a lot of new instruments that are coming on UPI are credit instruments.
Yes.
Where do you see this playing out from your perspective?
No, happy to share with you the story behind Ring. I think a lot of people ask us this question. It's actually a good place to kind of talk about it. It's not something hidden or anything. It's just that we've never spoken about it. So how did Ring start? So back in 2022, we were stung by this idea that we want to do this merchant-led acquisition piece. That we want to, up until 2022, we were only doing performance marketing-led customer acquisition. We had this idea that we want to do merchant-led acquisition. We will get the merchants. Merchants will have our QR code and our branding. We will pay the merchant a customer acquisition fee of 50 rupees at that time. Our CAC will be 1/5 of what we do for performance marketing. This was an idea that on paper made a lot of sense to us. We wanted to pilot it and experiment with it. So what we did is we said that we are not going to ruin the Kissht brand name or the Kissht experience. We are just going to run a pilot on the side, and we'll just give it a different brand name, make sure it's not linked back to our original brand, so that in case that experiment goes wrong, we don't have a brand backlash on Kissht itself. We launched Ring, and it was literally an overnight success. It just Kissht at that time used to acquire about 8,000 customers a day. Ring started acquiring 35,000 customers a day at 1/5 the CAC. So we were blown away. You are literally talking about a product that you launched as a pilot becoming bigger than the mothership in a period of 3 months. So we were like all just taken aback that, oh, what the hell have we just stumbled into, right? So we very quickly decided that one of the approaches that we had is we merge Ring back into Kissht. That would have caused a lot of brand identity problem. But the approach that we ended up deciding was that we will now end up making Ring our primary brand and over a period of time sunset Kissht. The reason we decided to do that was twofold. One, this merchant acquisition model worked very well. But the other problem that we always had with Kissht had become absolutely synonymous with small ticket personal loans. So whenever we wanted to target a slightly premium segment of customers, your mass affluent customers or affluent customers with a loan of 8 lakh or 10 lakh, they always thought that, oh, Kissht is a loan for under 2 lakhs. So it's not relevant for me. So we were never able to break that brand perception. We saw that a new brand will allow us to reset expectations on the brand itself. So we targeted Ring as a premium, as a wider brand appeal, and which we got it right. We also had this very strong concept that lending has to be backed by massive engagement features. It can't just be loan. Take one loan and it gets over, take another loan. So we doubled down on UPI. We brought UPI into the Ring app. We were the first launch partners for NPCI for a product which was the SDK based merchant payment where customers could pay to us and only to other merchants through the Ring app itself. So we bet saying that UPI will be a very good engagement product where customers can take a loan from us but keep using our app also for their UPI transactions. So in the back of their mind, they build a brand affinity towards Ring. When they want their next loan, say 6 months or 1 year down the line, they will not again and do a research that, oh, which are the lending apps in the market, where should I apply? But because they're used to using Ring, they will naturally come back to Ring itself. So that was the thesis. The one was the merchant-led acquisition. The second one was, expanding our brand's appeal to a larger base of the customers. And third was building massive engagement features into the Ring app. We did all of these three. We were ready to sunset the Kissht brand. I think towards the end of 2022, we started the process of essentially migrating the Kissht customers to Ring, sunsetting the Kissht brand. And we realized that, oh, the Kissht brand is very resilient. A customer who had been taking loans from Kissht for the last 3 years, right? All of a sudden you tell them that, oh, we are moving you to a new platform, which will offer you twice the ticket size at a much lower interest rate. Customer said, I don't want that. I know Kissht, I trust Kissht. I am not going anywhere else. If you're going to shut down Kissht, I will probably go and find the market. We just learned that the Kissht brand had surprisingly so much of resilience that we had to kind of backtrack from that. We had to backtrack from sunsetting the Kissht brand. We haven't been able to do it so far. There's a lot of cost associated with running two brands, two tech stacks and everything. But in the history of Kissht and Ring, that has actually paid off rich dividends for us. And we have never gone back to even thinking of sunsetting the Kissht brand because it just turns out to be very resilient. A very interesting pattern we learned in lending also, and it's not something that's very obvious. The moment your existing customers learn that this brand is either shutting down or going away, they stop paying their EMIs. They feel that, oh, if the brand is going away, यहाँ पे पढ़ना ही भरना ही नहीं पड़ेगा.
फर्क नहीं पड़ेगा.
The cohort of customers that we tried to migrate, the communication to those customers was, we are sunsetting Kissht, but we are moving your relationship to Ring. That cohort of customers, the delinquencies increased by 15% because all of a sudden they realize that, oh, ये brand तो जा रहा है ना, इसको मैं pay नहीं करूँगा, फिर जो होगा देख लेंगे. So a very interesting thing is, whenever you announce that you're shutting down, your delinquencies increase. So we are like, okay, boss, let's not rattle the hornet's nest. Let Kissht continue as a brand. Let Ring continue as a brand. Of course, that dichotomy has operational problems for us. Whenever I introduce someone, I have to first think that, oh, am I the founder of Kissht or the Ring? But then I say that, oh, I'm the founder and CTO of Kissht and Ring. Then I have to explain to them that, oh, they are not two different companies, they're two different brands of the same company, but all worth it in the end.
I'm sure. So I want to understand the mindset shift, right? Also, when you're talking about two brands. So,
Right.
Kish, you were doing low ticket loans, where I would believe that most of these loans would be a lot more online consumption, or I want to buy something very quickly, right?
Right.
That kind of. And now you, as you're saying with Ring, you're moving to an LAP kind of product, which has
Right.
been very,
Yes.
digital lending has so far had not that much impact on such products. So what are the customer behavior changes that you are noticing, and what are you building? What have you had to build something new for these segments from a tech and product perspective as well?
Yeah. So one is, so we are now having two new products in our pipeline. We always had personal loans in a big way. We have added this product called loan against property, and we are adding this another product which is what we are calling business loan, which is essentially a personal loan, but targeted to SMEs, individual entrepreneurs who are running a micro business or a small business. It's a personal loan, but targeted for them with higher ticket sizes, different underwriting parameters and criteria, and all and so on and so forth. When we started targeting the more affluent customers, or you can also say we were targeting both affluent and younger customers at the same time. We had a very specific set of customers that we went after in Kissht. These were between 25 and 35 years of age, usually with 2-3 years of work experience, earning anywhere between 35 and 65K a month. That was the customers we were going after in Kissht. With Ring, we wanted to go both after the fresh out of college, first job employees as well, right? People who are earning, say, anywhere between 18 and 35K also a month. What we realized is the biggest change that we had to do was the brand, the image of the brand itself. Kissht was, we had say Indian faces on our, Indian household faces on our platform in general. That was the imagery that was created. With the Ring, we went with this very youthful, vibrant vibe with our branding. We completely did the redesign. The Ring app redesign is currently nominated for the UX Awards in Berlin, one of the most reputable design awards, and we were very proud of that. We completely took a very different perspective to how the customer experience has to feel. It has to feel very young, very savvy, very sophisticated, without going into that extremely, just pop for the heck of pop. We wanted to avoid that also. The brand philosophy, the design philosophy, the app UI, UX completely changed in Ring. If you compare Kissht and Ring, you will not be able to say that they're two products from the same organization. They're water and oil. The other thing that we, of course, had to do is the messaging throughout the ecosystem, where we were targeting. With Ring, we started doing marketing in the cults. So we had our representatives in cult who would also explain the product, not sell the product, because the only way to get the product was download yourself, but they would explain the product to people. We started going after coffee shops, third waves of the world and the Starbucks of the world to try and do a reach out or a identity establishment for Ring itself, and that worked out very, very well for us. But at the core level, our underwriting engine didn't change. Our origination workflows didn't change. Our collections practices, our payment stack did not change. So the skeleton is the same. The skin on top of it is completely different, is how I would establish it. When you talk about products like LAP and BL, LAP is a different beast. It's a secure product. So all of a sudden, you have a lot of manual workflows. You have your field investigations where someone has to go and physically visit the house, take photos of the house. You have your legal appraisal where the property papers are to be picked up, xeroxed, given to your legal team who will verify and all of that. So that we've of course built outside of our digital ecosystem. We have a workflow for our agency partners who essentially go and do all of that management itself. So LAP is slightly different. Secured products are slightly different in that nature. Business loan, other than the underwriting engine being changed and the marketing targets being changed, nothing else has changed. The again, the core fundamental stays the same. It's essentially a PL product targeted for a different audience.
In the interest of time, I just have one more question, and this question relates to, as I was referencing to you before. I really loved your discussion, the talk that you gave at SFF. It was very inspiring for me personally, where
Thank
you
you.
talked about friction and how you have, rather than fighting friction, you have let it flow in the organization.
Yes.
So that's where, we are also an organization, right? So I would like to understand your perspective, because you talked about friction between founders there, but now your team would have grown a lot. You would
All
have
right.
so many people. I'm assuming that a decision of a Ring versus Kissht would have so many voices rather than
Oh
you
yeah,
four only,
absolutely.
right?
Yeah.
So how have you built the culture of the team when you have so many decision points, so many calls to take? Uh, if you can give us, it can be a long podcast
Oh yeah.
again,
Yeah.
but if like what you said about said in SFF, and you can give some insights on how has that culture part,
Correct. No,
built
as well, let me tie both of them together, right? I think the fundamental thing, at least I'll want to establish, is in the early days, the culture of the organization is a blend of the personalities of the founders and nothing else. When you're an early stage startup, trust me, you don't have the bandwidth or the time or the resources to go around and establish a culture, unless, of course, you are like, very established on what you want as a culture. The Kissht culture in the early days was truly a blend of the personalities of the four founders. I am essentially very methodical, very logical, very patient. I would like to build things in the right way, build for a longer period of time. My other three co-founders are, let's get it done now. I need something to start selling. I want to go out and start selling, right? They are that personality. But it ended up being a blend. Thankfully, it was 3 against 1, but I still at least had 50% of the sway because I controlled 70% of the team. And Kissht culture is a mix of the two. And literally in the Kissht office, there are like two aisles. There is one side of the bay which is all my team, and the other side of the bay which is all the other business teams. My team works on 6 month roadmaps with a larger vision and horizon. The other bay works on a weekly target that, oh, this week I have to achieve this. अगले हफ्ते का जो होगा देख लेंगे. But both of these parts again work in unison. The business teams which run on a weekly treadmill know how to expect the tech and the product teams are going to run, and so forth. They both ways, right? The larger part on culture is, you have to be not prescriptive. You have to let it evolve as an organization. Of course, you cannot avoid the founders' imprints on the culture. You want to identify that which are the negative traits in your co-founders and expect them to also point out in yours, so you are able to course correct, and that flows into the culture. At the right time, you also want to establish, what do you truly mean by a culture. Just the one of the strongest pieces of culture in Kissht that we have all worked towards is openness. Everybody can talk to everybody. There are no silos that, oh, the technology team doesn't know what the investor relationship team is doing. The technology team will not all of a sudden one day wake up and read in the newspaper that Kissht has done a fundraise of X. They would have been part of the loop from the beginning. If the completely random team, the debt, we raise marketplace debt team, doesn't need to know what products we are launching, but they're always in the loop. We try to make sure that there are no silos in the organization. It's by design, it's a very open floor plan. We are based in one single floor of the building we occupy. It's a 30,000 square feet building, but everyone talks to each other. You run into people. There are no departments, there are no walls. It's a very open space. And that's the mindset that we've also tried to establish. And that has worked out very well for us. But culture, again, the simple part is you can't set a culture in the beginning. The culture will just come from the founders' own personalities. You want to find a way that it's a blend of all the right things and an exclusion of negative personality traits.
Yeah, makes sense. Makes sense. Thank you so much, Karan, again for your time. A lot of learnings. I'm sure even people who are watching, who will watch this, will get. I got a lot of insights, so I'm sure people will also get that.
Super.
Thank you, Karan. Thank you for your time.
Great to be here, Ishan, and
Thank,
just a pleasure to be here.
thank you.
Thank you.
Thank you.